Morning, this is Flex, and trading for the day. We have an edge, but many don't use the edge. So this is our edge. Before using the edge, I'm going to show you something. So this is good. Yeah, so before coming to the edge, that simplified the whole thing. Now coming to trade, what am I supposed to do for the day? So let me take out anything called indicator. So this is PBX, P and L trading strategy. PBS, P and L trading strategy. First, we identify in our trading activities is to identify the previous day high and low. That's the first pivot. That's the first pivot point, and we call area. All right, so this is the first pivot point. Remember, we trade P and L as price action, and trading is not gambling, guys. It's mechanical. If you're not ready to be mechanical with trading, don't trade. Give your money to our copy system and you'll be fine. All right, so this is the previous day high and low. So today trade is looking dicey. I've told you when I come, the previous candle needs to show some clearer direction. This candle, there's no direction. Let me tell you why. The previous candle to this has eaten up this. So for that, but it closed bearish though, but it neither swept high nor low. That means what it means is that there are liquidity lying above here and there are liquidity lying below here. So if I'm going to extend to that pivot, so you could find out like this. This is an external liquidity. So it neither took the high, neither low. But what has happened here was simple. This today open, it came back to pick this previous day, a day before this. So that means your buyers probably you shall be buying, and I'm going to show you how your scanner actually helped you. So if we're done with that, so I probably want to see a recent break. Do we actually have a recent break? That's the question. So now what I would look for sometime, which is too long, is what I call established low and high. See that is too bogus, right? Good. So now this is low, established low, and then established high will be somewhere up here, even though it was a swing failure, right, on 4 hours. So now, do we have something? We have a structure, a recent structure break, which is this one. So this is a break of structure, an internal break of structure. We have this high and then a low. Then we have a high. So this has not been broken. This is just liquidity sweep. So that means if this structure break, we could have this another block, which was mitigated here. So let's go to 4 hours very quickly. Yeah, so in 4 hours, we have the structure well defined, okay? So this is a low, this is a high, and this is a low, this is a high, this is a low, then this is a high, this is a low. So now let's quickly look at it. This is a recent low, this is a recent high. So that should be like my dealing range. So if this is a high of 4 hours, so I can establish the high. Remember, this was previously high and low. Now, the market actually need to return back into the range for you to be serious about it, okay? But good and fine. This was a, you remember I was saying it the other day, that this has formed, right? This had formed um, a swing point, but that become a liquidity, an engineered liquidity. So if that's an engineered liquidity, see what really happened here. This is a structural break. So that means this is a recent break on 4 hours. If this is a recent break on 4 hours, then what we should have is an origin that brought about that break. All right. So this is a recent break. So that means this is a low, it's a swing low. So then we should look at this point as another block. And then we have a fair value gap dominate all of these places. So, but you can find out this fair value gap here. So now, if that is the case, so this is another block. Then below here, this week totally here is a support. Where is that support? Now, this is what we call some kind of importance. So that means if I take this, this is what's going to happen. So take from this swing low to this swing high. Okay, so we're still in a region for buying because this is 50% retracement level. This is an induced liquidity, and then this has been swept. That makes sense. And the day before that low too got swept, which is this one. I will not have energy to start explaining too much. Okay. So here we come. So if that's the case, so this is an induced liquidity. Now the market quickly come to sweep it and tap into the other block entirely and into this support or demand zone. Okay, so let me take it off and let me show you something quickly, everybody. See what something, can you see what happened? This scanner is bad, so we don't joke with it. See that? That is a support and a demand zone. So this is the support. This low to this low is my support. The market actually came there to tap it. So that means if I have this other block here, that the market should come to tap. And I was telling you guys yesterday that this is an induced liquidity. The markets need to come to sweep it, but then we need to return above. So let's take out this now. Got the entire region here from here to this 78, it's an area of focus. So, but this one is a point of interest here, the other block. Okay, so now let's go back to 1 hour. Here you come on 1 hour, which is very lovely. Okay, so 1 hour time frame. So we're going to have a recent break. So coming up here, this is a high and this is a low. And then we have this high. So that means this low still maintain. These are internal liquidity. All right. These are internal liquidity or internal structure. A low, a high. So if you still take it, you still warrant to come back to this point. Let's look at it quickly. Taking from here and then up to the. So you still find out that this is still an area of focus. So in this area of focus, the market come to tap to it. So tap into this point. Now open your chart, your scanner. See, can you see your scanner? Okay. So now that means your scanner too has done some job. Good. So this slope down. So if you look at your scanner, this is a kind of equal high. So almost a kind of equal high. So what you expect is that gold, having taken this low, this liquidity swept it over, then you should have gold returning, even if it's not going to make it to break the structure, as will come to sweep both high. So that means you are still looking at gold to come up to probably above, 4820 kind of region. 4820, yes, that's where you expect gold to come to. Now, coming to 1 hour time frame. So as the market return back to this region on your 1 hour, so you're supposed to go to 5 minutes immediately. Then that could give you probably an entry, but if you are going to do by market structure, so you are going to walk by the market reactions in terms of, so this is a double bottom. Now, this is another dangerous thing that the market will come back to what? Yes, that's good for you. Can come back, return again, and sweep the two, then returning. So, but now, if you were here, you are in money, and then you will be more relaxed. because at the end of the day, you have been able to find an entry, a double top, but we didn't have a nice structure. So if you can see that volume is still lagging here, and then we're going all this sideways move and all of that. So for gold, you want to see the market actually trend up, right? Because we have come back to mitigate this order block. So we're supposed to rally up, and good enough, we have swept this liquidity and we are inside the region. So maybe some kind of level of sideways for a while, or perhaps return back to a fair value gap, and then boom, up. Then take all this equal high and return back, or break this equal high. And this is the established structure that we're supposed to take to now know that the market continued. But nevertheless, within the time frame, you probably have been taking money, as it were. So going to 15 minutes, so you can see this is internal structure. 15 minutes here. So equal high. So sweep of liquidity, then return, sideways move, then return, sweep the high, and return back. So it's a bit confusing, right? But if you were in earlier, you will have been in nice profit. Okay, so that's what you have about gold. Liquidity low, very low strength. And so, but for people who are in. So now let's go to your scanner. If you are using your scanner, this is what you will have found out. Let's go with your scanner now. Can you see that? Amazing. I just told you guys about the market. Just told you about the rejection over here and all like. So we said when you come on daily and the candle was a very bad one, so that's an indecision. That's not a good candle. Also, I've swept everything fine in return, but it should not break below this. If you break below 4696, that's a bad one. All right, that's a bad one. So as long as the market remain sustained over here, then even if today go bad, tomorrow, and then we go above this, that means tomorrow will make more sense that we continue moving up. So having seen that this market is a scalping market, then you know what to do per turn when you start taking the trade. So if you look at it, this is 1 hour time frame. And what did I told you? Very simple, using your scanner. 1 hour have said buy. If that didn't mean this buy was on top of this place, so you can just go ahead and buy, but this is good. I like to refine it. Now, as at that time, what I'm supposed to do is just to go straight to 5 minutes. If I like, I can even start from 15 minutes. So if you go to 15 minutes, I do not have a nice setup that will command my buying. So 5 minutes straight up. And now you can see your buy on 5 minutes make a whole lot of sense. This is why I told everybody, pay attention. It's very simple. So this was your buy. Accumulation, manipulation, and distribution. That was a very nice job there. So this will have formed your entry from here. And then this is your buy. Your stop loss below the entry. That's just like 200 pips. And then 1 ratio, 2 risk reward. The job was done here. Oh, yes. The job was done there, 440 pips this early morning, if you were following. Now, extending to the up, so you see that you have a very serious resistance here, a very serious one for that matter. The support is weak, but the resistance is strong. So that's one thing you should understand. You can see that the resistance is strong. So what should I do now? Should I be selling? No. The market is choppy and going sideways. This is the time you wait. You do nothing except you break some important area. Then you want to act. Okay? So let's return back to the 1 hour that brought about this buy. Then that's where you are now just going to be watching. Perhaps, okay, this is 700 pips. This is why it is good for you to have this scanner and be up as you like. Okay? Now, so you can see now that, okay, what could happen is that gold could still return back to 4706 and then probably have a bounce. If it does not, that could be very dangerous. But remember, I said the most dangerous place is below this point here. But you can see that the supports are still very stronger. Then that will make you to extend that your buy, maybe the one you are DCA, you have DCA up here. That will end up giving you 1,004. Will it be today? It may not be. Then continue this way. That will give you 2,000. So trading is mechanical and you have to be meticulous about what you are doing. So ladies and gentlemen, so you are either waiting for the market to retrace and give you another confirmatory entry for a buy, and then you are careful about this double top, which is 4,820 level price. So I hope this form a very basic stuff for you. So the same thing on other peers, Euro USD, is the same thing. They actually dictate. And so, yeah, go to check. Okay, so there was a massive jump. We'll go to 4 hours. Which 4 hours was previous week. 1 hour. So this 1 hour is actually dangerous. Okay. Remember, today being Monday can be very choppy. It give you a sell on 1 hour. Look at the whole thing. These candles are 1 hour, no momentum. Now you can have a good signal, but no volume. So you have to, that means it's not complete. So invariably, if you sell from here, it could push you around for a very long time and eventually still break out to come and hit this point and still sell. So in such market, patience is required, okay? Patience is required. Very, very important. Patience is seriously required. Especially when it has to do with Monday. I told us about Bitcoin yesterday that very, very risky. It could get rejected here. And I think it has done that. So let's watch how it goes. It didn't even get to TP1. Okay. So okay, so that's just basically what I can just review for you guys today. Learning using your scanner will help you a lot to avoid some silly mistakes, and then it helps to discipline your emotion. So you are working strictly on rules. Now, the one you create for yourself, you may disobey it, but the one you are looking at, staring at you with your eye, so you probably may have to obey it and continue following it. Okay. Yeah, okay, so that's it. So if you look at these two, those the previous week. So if you go to 1 hour, so 1 hour you will have gotten a buy, even though you see a very serious resistance up there, but that will have formed a good buy for you. By now, you probably have taken some profit while waiting for the next action. So when the market is up, then you can do recheck of where to now buy or sell any of the instruments. Thank you very much. More updates I'll bring for us. Okay, the week has started, but it starts with a very low liquidity, very low volume. Unlike maybe last week or the other week, by now, market gold will have run massive journey, but quite unfortunate today or this week, no such marathon. Thank you.